A strong late-day rally brings the Dow back from a triple-digit deficit to close it down just 27 points. Investors had bailed out on news suggesting the economy might be shakier than first thought. Ford Motor lost its spot as the nation's #2 automaker last month. Ford sales slammed into reverse in November, letting a rival get ahead of it on the list of the largest. We'll tell you who it is. Shares of Home Depot go through the roof on rumors the home improvement company may be the target of a takeover by 2 private equity firms. But not everyone is convinced that Depot deal would be a good idea. Tonight's Market Monitor guest says there's no other way to put it. The dollar has collapsed, and that's bad news for the U.S. economy. He's John Murphy, Chief Technical Analyst at StockCharts.com. I'm Paul Kangas. This is Nightly Business Report for Friday, December 1st.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. December's trading on Wall Street got off to a volatile start on investor concerns about the health of the economy. The Dow closed down just 27 points after losing as much as 131 points earlier in the day. The Nasdaq fell 18. Investors unloaded stocks after a report showed a dramatic drop in activity in the U.S. factory sector. As Erica Miller reports, the data is stirring up debate on what the Federal Reserve will do next to boost economic growth.
Today's weak manufacturing data is more evidence to the bond market. The Fed's next move will be a rate cut. The Institute for Supply Management said its index of manufacturing activity fell to 49.5% last month. It's the first time the sector has contracted since April 2003. Historically, when the ISM has fallen below 50, the Fed has started cutting rates. Today's data reinforced a recent rally in the bond market, which has sent yields on the 10-year note to their lowest level since January.
What's driving prices higher these days is the view that the economy will continue to get weaker. We've seen growth around 2.5% for 2 quarters now, ending in September. It looks like in the 4th quarter, growth in the economy will be somewhere around 2% again.
Right now, bond market futures are pricing in 70% odds of a quarter-point rate cut by the end of the 1st quarter of next year, and 100% odds of a cut by May.
What's happening is, and this is natural within the bond market, there are those who want to get in front of and be early to the trade, so they're extrapolating and maybe pushing a little bit more than they should over the near term about the magnitude of this U.S. economic deceleration.
There seems to be a disconnect between the bond market and the Federal Reserve. On Tuesday, Fed Chairman Ben Bernanke said he was concerned about core inflation, leading many to predict the Fed might start raising interest rates again. But in the eyes of some bond strategists, the Fed is merely posturing.
The Federal Reserve is talking tough, but they're not likely to do more on the interest rate front in terms of raising interest rates. The Fed wants to be sure that inflation stays down. They're raising their credibility in doing so.
Crescenzi says holiday spending will be a main driver of the bond market in the coming weeks. If spending is soft, he says it would reinforce the notion of a slowing economy and help support the rally in bonds. Erica Miller, Nightly Business Report, New York.
Broadly lower this morning as those reports of a weakening economy raised investor fears of a hard landing. After 90 minutes of trading, the Dow was off 75 points and the Nasdaq down 25. A midday rally attempt failed partly because of another drop in the dollar, so the Dow tumbled to a 110-point loss at 3 p.m. In the final hour, though, bargain hunters cut the losses considerably. The Dow Industrial Average closed off only 27.80 at 12,194.13 today. This week, it rose twice, fell 3 times, and a net decline of 86.04 points. The NASDAQ Composite fell 18.56 to 2413.21 today. It also rose twice and fell 3 times this week for an overall loss of 47.05 points. The Standard & Poor's 500 was down 3.92, ending at 1396.71 today. In the bond market, the 10-year note gained to 7/32 to 101 and 16/32, pushing the yield down to an 11-month low of 4.44%.
Car and truck sales for the nation's big automakers came in lower than expected for November. Particularly hard was Ford, which saw its sales slump by 10%. Sales for Ford were so poor that it lost its rank as the nation's second largest auto company. As Darren Gersh reports, experts say the competition will only get tougher in 2007.
November was a tough month to be selling cars unless you happen to be selling Toyotas. Toyota overall sales were up 16% compared to last November, and it was the only big automaker to show strong car sales, up 14.3%. Toyota sold 15,000 more cars and trucks than Ford last month. It's the second time Toyota has edged ahead of Ford into second place behind GM.
It was a knockout month for Toyota. I mean, their sales were up about 16%, and they continue to take market share and continue to do very well. Right now they're well positioned across their entire model lineup.
Most people expected Daimler Chrysler sales to decline, but it surprised to the upside, increasing sales 3%. GM came in on track. Company sales were up 6%, largely due to strength in truck sales, up almost 16%. The company calls it a solid month in an underperforming industry.
We were helped by the fact that unlike the spring when gas prices and interest rates were dampening truck demand has come back to more normal levels. And that helps us because we're the world's largest truck manufacturer. We're #1, and we have a very strong lineup on the truck side of the business.
Meanwhile, Ford's results give a new meaning to the phrase Ford tough. Total sales were off 10%, and truck sales skidded 13%. Ford called it a disappointing performance, adding it expects its market share will be lower in 2007. An analyst agreed, saying Ford was hit hardest in its most profitable big truck and SUV segment, all of which may explain why Ford is buying out almost half of its hourly workers.
They really cut to the bone here, I think, as far as hourly workforce, and that tells me that they're really preparing for hard sledding in the future here.
Looking ahead, analysts are waving the yellow flag, warning sales will be flat or even down slightly just as the competition picks up. Toyota and GM are each preparing to roll out a new full-size pickup. It's the beginning of a new sales war in what has been a very profitable segment. Darren Gersh, Nightly Business Report, Washington.
There's talk on Wall Street today that Home Depot may be the next company in line to be bought by a private equity firm. The rumor mill is speculating that Colbert Kravis Roberts and Texas Pacific Group may be eyeing the home improvement retailer and that the price tag could be as high as $100 billion. That would make it the largest leverage buyout in history. In a speech this morning, Home Depot's CEO acknowledged that someone is probably running the numbers on the company just as Home Depot runs numbers on other companies. But, Paul, some analysts are rather skeptical about this and say that the deal possibly could not happen, saying the management and board would most likely resist such an effort.
Well, investors couldn't resist the stock today, Jeff. We'll see it as we look at our stocks in the news tonight. Topping the most active list on the big board, trading a hefty 64.9 million shares, was DirecTV, down a nickel. The high volume, no doubt due to the fact that the stock was added to the Standard & Poor's 500 index today, replacing Freescale Semiconductor, which was taken over. Then, second in volume came Home Depot, closing up $1, but it traded as high as $39.95 on speculation about being taken over by private equity firms. Pfizer was up 37 cents. Yesterday, the company boosted its 2006 earnings estimate by a nickel a share, up to $2.05. ExxonMobil moved up 39 cents. Then Ford Motor down 9 cents on those dismal sales, down 10% for November. That was fifth in volume. GE showed no change on the day. Walmart down 23 cents. EMC moved up 7 cents. And then General Motors, a 46-cent gain. Bank of America today confirmed it bought 28 million shares yesterday, but declined to name the seller. I think we have a fair idea who it might be. Advanced Micro Devices down 88 cents. The Department of Justice subpoenaed this company and NVIDIA regarding a probe into potential antitrust violations related to graphic processors and cards. NVIDIA stock on NASDAQ fell $1.45 to $35.54 a share. Federated Department Stores losing $1.49. Citigroup downgraded it from buy to hold because of disappointment over the performance of some Mays stores, which were converted into Macy's stores. H&R Block down 25 cents. Second quarter, a 49-cent per share loss, almost double last year's loss of 25 cents a share. Revenues fell 6.9% in the period. And then Live Nation, this company is an event promoter, puts on concerts and things like that. Stock up $1.61. Credit Suisse began covering the stock with an outperform rating and a $28 a share target price. Then we see Claire Storage rising $1.45. The company has retained Goldman Sachs to explore alternatives to enhance shareholder value, and that includes the possible sale of the company. Kelwood, a clothing marketer, up $1.82. Third quarter earnings, excluding one-time items, came in at 68 cents, up from 57 a year ago, and 5 cents per share above the street estimate. Finally, Hershey Foods losing $2.08. Prudential downgraded it from neutral to underweight. Volume leader on NASDAQ was Google, down $4.01. Apple Computer, after a series of highs earlier in the week, down 34 cents. Microsoft fell 24 cents. Then came Intel with a loss of 47 cents. And Research in Motion, which had a good gain yesterday, down $3.15, profit taking there. Cisco, 22-cent loss. Amgen off $1.66. Oracle was a 24-cent loser, and then Broadcom down 49 cents. And Dell, the only winner in the active list of 10, was up just 3 cents. Omnivision Technologies down $2.67. Second quarter earnings came in at 28 cents, excluding one-time items, and that was 2 cents below the street estimate. The third quarter earnings estimate from the company, no better than 12 cents a share, half of what they earned in this last quarter. Then Endpoint Technologies rising $2.68. This is an information technology firm, and a real turnaround in the fourth quarter. Earnings of 21 cents versus a loss of 5 cents in the same period a year ago. And finally, the NASDAQ stock market down $2.83. Prudential downgraded it from overweight to underweight and cut its price target from $40 down to $35 a share. Those are the stocks in the news tonight. Jeff?
Thanks, Paul. Well, globalization has been slow in the retailing business. American and European companies have struggled to transplant their business models abroad, especially in Japan. But while many foreign companies have been brought to grief in the world's second largest economy, one retailer seems to have cracked the code. Lucy Kraft went window shopping and has this report from Tokyo.
When furniture king IKEA first arrived in Japan in the 1970s, it bombed big time. So when the Swedish retailer decided to try again 5 years ago, it took its time.
We really try here to meet the soul of Japanese people.
Privately held and free from pressure to deliver quick profits, IKEA ran an almost anthropological study, exhaustively documenting life in a Japanese household.
And we have been to many, many homes visiting. We're well over 100 homes. And we know very well how Japanese people are behaving, what things are important for people at home, how they cook their food, how they store their things, how they even take their bath, how so to say, life at home goes on.
The result was unveiled last spring here in the Tokyo suburbs, perhaps the most costly outlet IKEA has ever built. So would you have this kind of a setup in one of your American stores, for example?
Yes, we would, but then this room would be much bigger.
The kitchens and living rooms would be familiar to IKEA shoppers in Houston or Pittsburgh, except every detail is precisely calibrated to fit the cramped spaces where most Japanese live, with accessories that exploit every nook and cranny.
If you go into the IKEA in Japan, It's basically the same as any IKEA around the world, but they've added the little twists and changes to fit with the Japanese consumer perception, particularly in terms of the size of the rooms, the size of the products, and all kinds of things that are just for Japan. And so few Western companies really do that.
Other foreign retailers, such as Carrefour and Walmart, have tried a low-price strategy. But the IKEA case, experts say, shows that strong branding is critical.
It's not a case of just opening a store in the same way you'd open a store in the US or any other country. There has to be a certain understanding of the differences between Japanese consumers and overseas. And you have to have, as I said before, this unique and different offer that sets yourself apart from the Japanese competitor or Japanese alternative.
IKEA doesn't release results, but says it has beaten its sales targets and is on track to open a dozen more stores here over the next few years.
That is one of our big secrets, is that the distance between the lowest price and the high design and quality value, that of course is very appealing to people.
With its huge economy and enthusiastic shoppers, Japan should be a mecca for the world's retailers. But if the IKEA experience is any guide, Japan's market is accessible only to those companies willing to painstakingly adapt to local needs. Lucy Kraft, Nightly Business Report, Tokyo.
Monday, find that calculator, sharpen those pencils. We start some last-minute tips to save money on your federal income taxes.
Well, here's a look at what's happening next week. Our Friday Market Monitor guest is Ernie Ankrum, the Chief Investment Strategist at Russell Investment Group. And on the economic calendar, Monday, October pending home sales. Tuesday, it's third quarter reports on productivity and labor costs, which come out along with October factory orders. Wednesday, the government reports its weekly report on crude oil and gasoline inventories. Thursday, it's weekly jobless claims. And Friday, it's the November employment report.
My guest market monitor this week is John Murphy, Chief Technical Analyst at StockCharts.com. And welcome back to Nightly Business Report. John, great to see you.
Good. It's good to be back, Paul.
Wall Street has had a tough time of it this week, as you know. And what do you think is the main factor causing this sell-off in stocks?
Well, I think one of the factors certainly has been the plunge in the U.S. dollar. It fell to a 20-month low against the euro, a 14-year low against the British pound. That kind of hints at economic weakness. That's been confirmed by a 10-month low in U.S. bond yields. So I think it's worrying the stock market a little bit that it suggests that the U.S. economy could be softening a bit.
In other words, it's softening a bit to the point where we might get a hard landing.
Well, not only softening, but softening relative to foreign markets. I mean, in the sense that some of the foreign markets are holding up better than the U.S. market. As a result, some money's coming out of the U.S. market and flowing overseas.
How does an investor profit from this weakness in the dollar?
Well, there are a couple of ways. One way, of course, is precious metals. Generally speaking, when the dollar drops, precious metal assets go up. That's one way to do it. Commodities in general. And also, as I mentioned, foreign stocks usually tend to do a little bit better than the U.S. market when the dollar is weakening.
Well, speaking of the U.S. market, what is its technical condition right now? You're an expert, you're a chartist. Tell us.
Well, I just think it's overextended, Paul. I mean, it still looks okay, basically, technically, but we've run up 15% in 3 months with hardly a pause. So it's overextended at this point. I think the best thing the market could do would just be to stall for a little bit, maybe pull back a little bit, or even trade sideways for a couple of weeks, work off this overbought condition, and then I think would be in a healthier position.
What's pulling back a little bit in terms of percentages on the major averages?
Well, something like bank stocks have been pulling back, for example. They're being hurt by the yield curve. We're seeing some selling in retail stocks, for example.
All right. Now, on your last visit with us in June of 2005, too long ago, but you recommended buying 6 securities. Let's see how they've done since then. We see Oil Service Holders Trust up 43%, Baker Hughes up almost 45%. Those were 2 great recommendations. And then you like the gold ETF, Street Tracks Gold, that's up a mere 46%. Barrick Gold up 25.25%. And you had 2 others, Healthcare Select. Well, that's almost a loss for you, up only 7%. And the iShares NASDAQ Biotech up 18%. Great picks, and I compliment you. Excellent.
Thank you. Thank you.
Now, do you have some new recommendations?
Well, coincidentally, when I was on 18 months ago, we were just beginning to get really bullish on the precious metals, and we are doing that again. So we still do like the precious metals.
Okay, now how about some individual? You talked about ways to profit from the falling dollar. Is there a specific issue?
Well, yes. In fact, I don't know how many investors are aware of this, but there is an inverse dollar fund. It's called the Pro Fund Falling Dollar Fund, and it trades in the opposite direction of the U.S. dollar. So obviously it's been going up recently. In fact, it hit a 20-month high this week. So,
and you think it'll go higher? Obviously.
Well, I think it's a little overextended on the short term. There's no question about it. But I think that it's probably the best way to play a falling dollar.
And the symbol quickly?
FDPIX.
Okay, a number 2 choice.
Well, sticking with the precious metals, we're going to recommend the Silver Trust this time, the Silver iShares SLV, only because it's been acting a little bit better than gold at this particular point.
Okay.
I like the whole group, but I kind of lean towards silver.
And we have a chance for one more.
And that's Japan. I like the foreign markets. I think Japan is just very undervalued at that point. The EWJ, which is the Japan iShares, would be my pick.
John, do you personally own any of these securities?
No, I don't.
Okay, I want to thank you very much for being with us once again, and I hope your choices are as successful as they were last time.
We'll hope so.
My guest, John Murphy, Chief Technical Analyst at StockCharts.com.
And recapping today's market action, a late-day rally brings the Dow back from a triple-digit deficit. The blue chips close off just 27 points, and the NASDAQ loses 18. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on PBS.org. In the Money File tonight, the key question you should be asking before you buy a mutual fund. Here's Bill Barnhart, financial markets columnist for the Chicago Tribune.
A new word is emerging in the investment world, bogle eyes. You'll remember a few years ago when Google was officially declared a verb by the Oxford English Dictionary. Well, I'm rooting for bogle eyes to achieve similar acclaim as more people realize the power of low-cost investing. Bogle eyes is derived from the name of the founder of mutual fund giant Vanguard Group. He's Jack Bogle, and at age 77, he's still going strong as an outspoken advocate for simple, low-cost investing. Bogle's message is that the best way for most individuals to save for their retirement income is to own a piece of American business. And the best way to own a piece of American business is through broad-based and low-cost index funds. As Bogle puts it, owning American business for the long term is a winning game. Beating the market after investment costs is a losing game. Many investors ignored the fees and expenses they were paying as they accumulated their investment portfolios, but as we age and begin to tap those portfolios for income, the drag of these fees will become even more apparent and harmful. That's why investment experts who have no stake in the fees are beginning to ask, has this mutual fund or this annuity been Vogelaized? That is, has it been stripped of needless expenses? It's a question you should be asking too. I'm Bill Barnhart.
And that's Nightly Business Report for Friday, December 1st. I'm Jeff Yasteen. Have a good weekend, everyone. Paul, you have a good weekend as well.
And the same to you, Jeff. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you. For more information about investing, you may order the NPR Video Library of Personal Finance by calling 1-800-535-5864. This program is available in either the VHS or DVD format.